Good morning and welcome to TOI Japan Market Radio. I'm your host coming to you from Tokyo on December 4, 2025. This is our daily briefing for global investors tracking Japan's equity, currency, and fixed income markets. Let's dive straight into today's session.
Thanks for having me. Today we saw a strong performance across Japanese equities with the Nikkei 225 closing at 51,028.422, up 2.334%, while the TOPIX gained 2.002% to finish at 3,566. The Mothers Index added a modest 0.297% to close at 2025. On the other hand, J-REITs pulled back slightly, down 0.669% to 2004.5. Meanwhile, the yen strengthened notably against the dollar, with USD JPY falling 0.676% to 154.753. Gold in yen terms dropped 0.673% to 15,500, while crude oil managed to gain 0.867% to 59.35.
That's a significant move in equities, particularly given the backdrop of yen strength, which typically creates headwinds for Japanese exporters. Let's unpack what's driving this rally. The headline story today is that the Nikkei hit a 3-week high, and it appears AI-related robotics makers are leading the charge. Can you walk us through what's happening in that sector?
Absolutely. We're seeing strong momentum in Japan's industrial robotics and automation space, driven by the broader artificial intelligence investment wave sweeping through global markets. Companies like Fanuc, Yaskawa, and subsidiaries of firms like KUKA are benefiting from this trend. What makes this particularly significant for Japan is that these companies hold substantial global market share in manufacturing automation and industrial robotics. This isn't just a domestic story, it's about Japan's competitive positioning in AI-enabled productivity tools worldwide.
And given Japan's well-documented demographic challenges, this automation theme seems structurally important beyond just the current AI hype cycle.
Exactly right. Japan faces ongoing labor shortages and an aging workforce, which makes labor-saving automation not just desirable but essential for maintaining industrial competitiveness. So when we see this rally in robotics makers, it reflects investor confidence that Japanese firms can capitalize on both the global AI build-out and domestic structural demand. For the Nikkei and TOPIX, this creates positive near-term momentum, particularly in the robotics and industrial equipment subsectors. However, it's worth noting this is a sector-specific strength rather than broad-based economic acceleration. For the yen, this equity rally alone has limited direct impact, though sustained risk on sentiment could provide mild yen weakness if global risk appetite improves further. JGB yields are likely to remain relatively unchanged since this isn't indicating broader economic overheating.
Staying with the yen theme, we need to address the significant currency move today. The dollar has now declined for its 10th consecutive trading day, and the yen is sitting at a 2.5-week high against the greenback. That's a remarkable streak. What's your read on this sustained dollar weakness?
It's a critical development for anyone invested in Japanese equities. This 10-day losing streak for the dollar reflects broader shifts in currency markets, likely tied to changing expectations around U.S. monetary policy, shifts in risk sentiment, or capital flow dynamics. For Japan specifically, a stronger yen creates several headwinds. First, export competitiveness deteriorates because Japanese goods become more expensive in foreign markets. This particularly affects automotive, electronics, and machinery manufacturers who have heavy weightings in both the Nikkei and TOPIX. Second, Japanese multinationals face earnings translation pressure when they convert foreign revenues back to yen, which compresses reported profits.
So despite today's strong equity performance, the yen strength could become a drag going forward?
Precisely. Historically, yen appreciation correlates with equity weakness in Japan because of the export-heavy composition of the indices. We're already at a 2.5-week high for the yen, and if this dollar weakness continues, we could see downward pressure on equities emerge. There's also the policy angle to consider. Rapid yen appreciation often prompts commentary from the Bank of Japan or government officials about currency volatility, and that could influence monetary policy discussions or even trigger intervention talk. Additionally, yen strength can signal capital repatriation and risk-off positioning, which would further weigh on equities. For JGB yields, we might see some downward pressure as safe haven flows return to Japanese government bonds, although this could be offset if global inflation expectations are rising.
That policy dimension is important because the BOJ has maintained its ultra-accommodative stance longer than many other central banks. Are you monitoring any specific levels or thresholds where intervention becomes more likely?
The key is watching not just the absolute level but the speed of movement. If we see the yen strengthen too rapidly, that's when authorities tend to express concern about disorderly moves. Right now, the move to 154.753 is significant but relatively orderly over 10 days. However, if we break through certain psychological levels quickly, particularly below 150, that's when verbal intervention or actual intervention becomes more probable. The other factor is whether this dollar weakness is driven by U.S. rate cut expectations, which would be structurally yen positive, or by broader risk aversion, which sends more mixed signals.
Meanwhile, in corporate news, we're seeing developments in the resources sector that could have implications for Japan's commodity-dependent industries. Rio Tinto announced it's exploring divestments of up to $10 billion. Why should Japanese investors pay attention to a mining company's portfolio review?
This matters significantly because Japan is a major consumer of Rio Tinto's core products, particularly iron ore, coal, and minerals essential for steelmaking and manufacturing. Japan imports virtually all of its raw materials, so any large-scale divestment by a major supplier like Rio Tinto could signal potential shifts in global commodity supply chains and pricing dynamics. If Rio Tinto exits assets that supply Japanese industrial demand, or if long-term supply agreements and pricing terms change, that directly affects the cost structure and competitiveness of Japan's core industries like steel, chemicals, and energy.
So we're looking at potential knock-on effects through Japanese trading houses and heavy industry?
Exactly. Companies like Nippon Steel and the major trading houses, Mitsui and Mitsubishi for example, have significant commodity exposure. They could face near-term volatility depending on what specific assets Rio Tinto divests and whether that signals tightening supplies or creates price pressures. On the flip side, if the divestments lead to more competitive commodity access or lower prices, that could actually be positive for Japanese manufacturers. For the yen, commodity price weakness resulting from large divestments could apply some pressure, since lower commodity prices typically affect emerging market and commodity-linked currencies, which indirectly can support the yen in a risk-off environment. JGB yields would see minimal direct impact, though deflationary commodity signals could marginally support long-duration Japanese government bonds. The bottom line is we need to monitor which specific assets Rio Tinto plans to sell and understand the exposure details relevant to Japanese supply chains.
That supply chain angle is crucial given how integrated Japanese manufacturers are with global commodity flows. As we wrap up today's discussion, what are the key themes global investors should be focusing on for Japan right now?
I'd highlight three interconnected themes. First, the sector-specific strength in AI-related robotics and automation, which plays to Japan's structural advantages but remains concentrated rather than broad-based. Second, the sustained yen strength and 10-day dollar decline, which creates a headwind for the export-heavy equity indices despite today's gains. Third, the commodity supply chain developments that could affect input costs for Japanese industry. The tension between positive sector momentum and currency headwinds is the key dynamic to watch in the near term.
And for those tracking the Bank of Japan, any shifts in the yen trajectory or velocity could prompt policy commentary that moves markets.
Absolutely. The BOJ remains the wild card, particularly as other central banks have moved more aggressively. Any hints about normalizing policy or concerns about currency volatility will be market-moving events. We're in a period where data dependencies and currency levels matter enormously for Japanese asset allocation decisions.
Excellent context for our global investor audience. To recap today's session, the Nikkei 225 closed at 51,028.422, up 2.334%, reaching a 3-week high on Robotics strength. The TOPIX gained 2.002% to 3,566. USD, JPY fell 0.676% to 154.753 as the yen hit a 2.5-week high amid sustained dollar weakness. If you follow Japan's markets and want daily insights like this, consider subscribing to TOI Japan Market Radio. Thanks for joining us today.
Thank you.